Welcome, everybody, to Moving Markets. Today is May the 13th, 2019, Monday morning. U.S. stock market has been open for a little over 2 hours, about 2 hours and 15 minutes. And so far, the story of the day is that it's a bloodbath on Wall Street. There's a couple things going on. Obviously, there's a continuation of the trade wars and an escalation of things. The NASDAQ is down. The S&P is down. The NASDAQ is down 258 points, over 3.25%. That's a massive one-day move for the NASDAQ. Tech stocks are getting absolutely pummeled, and I'll tell you why in just a minute. But both the Dow and the S&P are down respectively about 2.33%. Now, also a big move for a single day in the market. And it's real simple. I mean, this is real simple. I'm not even going to say, I'm going to resist saying that it's an overreaction. I do feel that way a little bit, but I'm going to resist the temptation to say that this is just a straight up overreaction. This is a panic reaction, no question about that, and that in and of itself could be considered an overreaction. But as everyone should have expected, and anyone who says they're surprised by this really doesn't understand anything that's going on in the economy in terms of economics. Over the weekend, in fact, I think it was early this morning, our time, it would have been, mid-afternoon tomorrow in China. I don't know the time zone difference in China, but they're like ahead of us. They're way ahead of us. So it's like tomorrow, early morning or something. I don't know. Anyway, China came out and said publicly, in retaliation of the increased tariffs that went into effect Friday morning, Thursday at midnight, Friday morning at 12:01 a.m. In retaliation to that, we're going to raise tariffs on about $60 to $120 billion worth of U.S. goods, and we're going to put tariffs in place anywhere from 5 to 25%. So you've got this tit for tat going on. You've got last week's Sunday afternoon, Donald Trump said, hey, on $200 billion worth of Chinese goods coming into the United States, we're going to raise tariffs up to 25% because China has reneged on some of the things they said they would do in these trade negotiations. And then you had all this back and forth through the week. We had a down day on Monday that actually had a pretty good recovery. Dow was down over 100 points, but the bleeding wasn't too bad. Then you had the massive, huge sell-off, 470 points to the downside. It's 473, I think, is what the Dow finished down. And we were glad that we were only down 473 because the Dow had been down 690 points at one point during that day of trading. Then you had Wednesday where things actually turned out a little tiny bit positive, just fractionally to the positive side. Then you had Thursday was kind of a repeat of Monday. You had the big sell-off. The Dow was down over 400 points during the day, finished only 132 points down. So again, we were down, but we were happy we weren't down way farther than that. And then Friday morning, if you remember, the Chinese delegation goes in to negotiate with the U.S. delegation. They're in Washington, D.C. They only meet for a couple of hours, and the meeting ends after a couple of hours, and everyone's thinking, oh no, the tariffs went into effect this morning, and it's a short meeting. But very soon after the meeting ended, Steve Mnuchin came on TV or went on an interview somewhere and said the talks were productive, and we feel like we accomplished some things. All of a sudden, that turned the markets, and the Dow ended up finishing to the upside over 114 points, I think. So, it kind of wiped out one of the two moderately down days. And by the end of the week, it wasn't nearly as massive a sell-off as what it looked like it was going to be early in the week. So this morning, early, China comes out and says, hey, we're going to retaliate. What's weird, and it should make sense to me, but it doesn't, and it never will. I'm just going to tell you, it doesn't make sense, and it never will make sense to me, that there is the massive reaction to that news that we're getting because it's what was expected. I don't know why anyone would not have been expecting China to come out and do something in retaliation. But the markets are behaving as though they're shocked. It's just, what? China's going to retaliate? Oh my gosh, sell everything. I mean, that's honestly, I swear to you, those conversations are taking place in offices on Wall Street this morning. Those conversations say, I can't believe China's retaliating. Sell everything. And everything is getting sold off. So the Dow is down 621 points. I mean, I think that's pretty much the low of the session. And I don't know that anything is going to happen today to bring us back. That's not to say that we couldn't rebound a couple hundred points, similar to what happened on Tuesday of last week when we were down 690 points and finished only down 473. I think when I was on the air on Wednesday, I was saying, it's a pretty crappy day in the market when we say we only finished down 473. Well, today, I'm not expecting that. It could happen, but I'm not expecting us to finish down any better than we are right now, 620 some odd points to the downside. I made a mistake last week when I spent some time talking about tariffs and talking about who pays the tariffs and how the tariffs were paid. I don't know that I made a mistake. I left something important out. When tariffs were created, and tariffs were first used probably the very first time two different countries traded products with each other, tariffs were put in place. Tariffs were used primarily to keep a fair trading field for one country or the other. Let me give you a real oversimplified example. Back in the beginnings of this country, when we were a brand new country, we're talking 1776, 1780, 1790, one of the largest, most staple products grown here in the United States was tobacco. Tobacco was a huge part of the economy of the United States. So we had trade. Once we won the Revolutionary War, we had trade open with countries like France and countries like England and countries like Germany and Spain. We had trade going back and forth. We were producing massive amounts of tobacco, and tobacco was very popular over there. Now, they were producing some of their own, but we were producing a lot more than they were. So here's the scenario. This is a simplification of why tariffs were necessary in some instances. The United States is making not only enough tobacco to supply the need for it here in the United States, they're making more than enough, and they're selling it to European countries. Now, those European countries have some tobacco growers over there, but the fear is that if a better, cheaper product is coming from the United States in massive quantities, it's going to hurt the tobacco companies, the tobacco producers over there. So a tariff is imposed. England, France, Spain, Portugal, Germany, they impose a tariff on the import of tobacco products over there. The purpose of that tariff is so that the companies over there producing tobacco have a cheaper product, and therefore the citizens will want to buy their product first and only fill the demand for more than what they can produce with product coming over from the United States. If there was not a tariff in place, we're producing so much more here, and we're producing it for so much cheaper here, that our tobacco coming into England, our tobacco coming into France and Portugal and Spain would be so much cheaper that people would buy that tobacco first, and the tobacco growers over in those countries would get put out of business. So you can understand from a country wanting to protect its own industry and protect its own people, they need to have a tariff in place. That was the purpose of tariffs. Now, fast forward to where we're at right now, 2019, and this has been the case going back to probably, I'm guessing here, 1960s, 1970s. Companies in the United States started to figure out that they could manufacture their product cheaper in places like China, Indonesia, India, the Philippines, Vietnam, Korea. Go to any store and look at the tags on a lot of products: made in China, made in Indonesia, made in the Philippines, made in Korea. The labor over there is so much cheaper that a product could be manufactured over there, and even with the cost of shipping it back over here, it was cheaper. U.S. companies started figuring this out. Mexico is another example. I mean, made in Mexico. You see it on a lot of things. It's because of that the whole situation with tariffs switched. When a company imposes a tariff, instead of it just being to protect from this company bringing their product over here at a cheaper price, it's this company manufacturing over here for a cheaper price, bringing it back over here. Now it's not this company over here or this country over here getting punished. It's this country potentially getting punished. So the part that I left out, if you listened to every episode and if you listened last week, the part that got left out is that initially a product being made and manufactured in China by a Chinese-owned company is going to get hurt by the tariffs we're imposing. But if you take a company like Apple, who is a US-based company, but they manufacture their product in China, just use the iPhone as an example. They manufacture the iPhone over in China, and then the iPhone gets shipped back here. It gets that tariff put on it simply because it was manufactured over there and shipped back here. Well, it's Apple that's going to ultimately pay that tariff. And at some point in time, Apple is going to pass the cost of that tariff onto the consumer. That might hurt us. That might hurt a Chinese consumer. That might hurt a consumer in England or Germany or Belgium or Russia. Wherever that iPhone is purchased, that cost of tariff may get passed on to that end user and that end consumer. Well, the United States is probably still one of the biggest, if not the biggest user of that product. And so it's ultimately, in the beginning, up front, it's the US-based company and the US consumer that gets hit with that tariff. We're the ones that feel that tariff. In the long run, it is China who gets hurt only because Apple is going to say, listen, we don't want to absorb the cost of a 25% tariff. We don't want to pass that cost on to our consumer because our sales will go down if we're continually passing that cost on to our consumers. Therefore, we need to find some country other than China to produce that iPhone for us. We're going to look at India. We're going to look at Vietnam. We're going to look at Korea. We're going to look at the Philippines. We're going to look at Indonesia. We're going to look at these other places where there's still relatively cheap labor compared to the United States. And we're going to manufacture our product there because then it's going to come back to us without the tariff in place. That's where it ultimately hurts China. So when you hear people in the news saying this tariff war, this trade war is going to be a lot more damaging to China than it is to the United States, that is only true in the long run. In the short run, it can be slightly more damaging to us. And that is why you see this sell-off in the market, because now you've got two things happening. You've got a tariff imposed on China that may actually in the short run do more damage to the United States and the US consumer. And then you've got China imposing a tariff on US products, and that's going to hit it. We produce a lot more wheat and we produce more soybeans and we produce a lot of stuff that China consumes, but it's actually US companies producing it in the US. So it goes back to that scenario with the tobacco. We're a US company, we're manufacturing a US product, we're sending it over there and we're getting hit with an extra tax on it. It's not like China is coming to the United States to have something manufactured and then brought back over to them. Then their tariffs would have the same impact on their economy that our tariffs have on their economy. It's not working that way. Short term, this trade war hits the US consumer in the pocketbook. Now, I still think it's a necessary evil. I still think to get China, we hear all the time that China plays the long game. The U.S. may be looking at what's going to happen in the next 4 years because of our election cycle. The U.S. may be looking at how damaging is this going to be politically right now to the president because Democrats want to seize on this during the next election. They're gleeful over this. No wonder Chuck Schumer is saying, stay the course, Mr. President. He knows there will be an impact short term on the U.S. economy and that Democrats will use that come the next election cycle. But Trump's hope is this, and the administration's hope is this. China looks big picture. China's looking at 100 years, not 4 years. Xi Jinping is never going to be voted out of office. It's a communist country. He intentionally had parliament over there, whatever they call the Politburo, whatever they call it. He intentionally had them change the law saying there's no term limit on a president. He basically just voted himself into office until the day he dies or the day he wants to step down. And he's looking at the long game. He's not looking at a 4-year cycle, except in the sense that he may be looking and saying, if the U.S. gets someone who's not as hard on us as Trump in office next time around, then we can negotiate a deal which is much more favorable for us. Trump is saying, look, I'm going to be in office 4 more years, and if you don't strike a deal now, I'm going to make it 10 times harder on you next time around. These tariffs are eventually going to hit the Chinese. They're going to hit it where they're going to hit them where it hurts, and they're going to hit them with major manufacturers, companies like Apple, Nike. Pick any company that Walmart buys a lot of products from. It's going to hit the Chinese economy when those companies are all looking for places outside of China to have their products manufactured. That's going to sting the Chinese economy. It's going to sting it badly. So, look, this is going to get uglier. It's not going to get, I don't think it's going to get better immediately. I think there could be a lot of back and forth. I think you can have days this week and next week that are like last week, where there's a rally and things are up on the day, or where things aren't down nearly as far as they were early in the trading day by the time the market closes. But make no mistake, the tit for tat is going to continue. I do think we'll eventually get to a trade deal, and I think it will happen within the next few months. But there's going to be this back and forth, and this back and forth is going to hurt the market short term. Now, the one silver lining that could happen, Trump wants the Fed to decrease interest rates 1%, and the Fed is saying there's no reason to do that. If our stock market starts taking a hit beyond what happened last week, beyond what's happening today, if it starts taking a major hit, that affects the whole economy. That's 401ks are affected by that. Pension plans are affected by that. Individual IRAs and accounts are affected by that. Retirement, everybody is affected by the stock market dropping. Okay, that hits everyone. People live off dividends of stocks in their retirement. They're going to get hurt by this. That's going to bring consumer spending down. It has a ripple effect. That could bring the Fed off the sidelines to say, all right, we're not doing this because Trump wants us to. We're doing it because of what's happening in the market and therefore the rest of the economy. And maybe we need to drop 0.25% next time we meet. Maybe we need to drop another 0.25% the next time after that. It's not inconceivable that this declining market could cause the Fed to do an interest rate decrease. I don't think don't get all excited about that happening only to the point where you're going to get disappointed if it doesn't. I think we'd be okay if interest rates stayed the way they were and there wasn't an increase anytime soon. But don't expect a decrease right away. I'm saying it could happen. That could be the one silver lining. And a decrease in interest rates could spark a rally in the stock market again, therefore bolstering the whole economy. That's the one little teeny good thing that could come out of this. So moving markets today, China trade wars, the U.S. imposing tariffs, China retaliating with more tariffs. It's going to continue. It's going to go on. That is moving the markets. On the political front, in addition to the politics that are behind the trade war, funny story, Alexandria Ocasio-Cortez, I love talking about her because she's such a moron that she just makes herself such an easy target. I'm sure she's a nice person. When I say moron, I mean her intelligence is incredibly, incredibly low. And she surrounded herself with people who are such elitists and such snobs that she repeats what they say. She's not smart enough to come up with this stuff on her own. She repeats what they say, and they're convinced they're right no matter what. No matter what, they are convinced that they're right. She is trying to walk back. When she introduced and rolled out the Green New Deal a few months ago, so many holes have been punched in that thing is sinking faster than the Titanic right now, except for the extreme hardcore liberal base. She's walking. She said when she rolled out that deal, the world is going to end in 10 years if we don't impose this new Green Deal. It's a complete fallacy on multiple levels. I mean, there's not time in 10 episodes of my show to get into how ridiculous that is and how many ways that is stupid to even suggest that. But there have been so many holes punched in it. It's going down very fast. Over the weekend or sometime early today, she tried to walk it back and say, that was kind of meant as a dry joke. And if you really believed that, she said she made some comment about how unintelligent you were. You had the intelligence of a zoo animal or something like that. She doesn't even know how stupid she is, which is the case with most stupid people. They have no clue how stupid they are. does she not realize that she just insulted her entire base of supporters? Because when she said that, they absolutely unequivocally believed her. What she did was complimented most of us who didn't believe her, who knew she was full of crap, who knew she was saying something to get attention, who knew she was making stuff up in the hopes of bolstering her platform and her position. We all knew that. She's giving us credit for not believing her stupidity and her idiocy when it spewed out of her mouth like unintelligent vomit. We all knew that. It's her supporters who believed it, and she just insulted the crap out of them with what she said. And they're mostly too stupid to realize that she just insulted the crap out of them. I mean, seriously. It's being spun right now by the hardcore left media as, oh yeah, we all knew it was, we all knew she meant it as a joke. No, you didn't. You morons believed it. You followed it lockstep. Her supporters followed it lockstep. They're like, you heard what Alexandria Ocasio-Cortez said. The world's going to end in 10 years if we don't do this new Green Deal. They all believed it. She insulted them this morning, and the media is spinning it like, oh, all you conservatives who believe that. We never believed it. We started punching holes in it from day one. We started pointing out how stupid the comments were and how unbelievable they were. And yet it's being spun as though we were the ones that believed it and her supporters weren't the ones that believed it. You can't script this stuff. Hollywood, who is ultra liberal as a whole, could not come up with a more asinine, ridiculous script than everything that flows out of her mouth. If they tried to make a movie out of everything that she says, the producers, who are liberal as all get out, would look at each other and say, no one's ever going to believe this garbage. We can't put this on a movie or on TV. But the media will. Trust the media to do the stupidest thing they can possibly do at every turn. I found that interesting. It doesn't have a lot to do with what's moving markets today. It doesn't have a lot to, I just found it humorous and couldn't resist taking a shot at it because she just makes it too easy. She's like a Dodger relief pitcher that just throws meatballs over the middle of the plate and makes it easy for the other team to knock them out of the park. I'm a huge Dodger fan, and I hate our bullpen. I absolutely think we have the worst bullpen in the history of Major League Baseball. Statistically, that's probably not the case because the Dodgers still have the best record in baseball right now. But our bullpen is horrendous. There's no lead that we have confidence in protecting when we get late into the innings of games. Anyways, Alexandria Ocasio-Cortez, she just throws them out there like the Dodger bullpen and makes it easy to just knock them right out of the park. I hope she keeps doing that. I hope the Dodgers reverse course, but I hope she keeps doing that. All right, folks, that's it. That's moving markets for the day. Hope you have a good day in spite of this ugly sell-off. Bye-bye.